Mastering Probability 30 days risk-free today. TFNN, educating investors.
The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Wednesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. About 24 minutes to go until the start of trading, and you got markets in green territory across the board right now. S&P's up by about 0.2%, trading at 59.13, positive by 8 points. NASDAQ 100, positive by about 0.2. Similar action, up by 42 points, 21,320. Quite a number from where we were on April 9th. Dow up by 40 points. Dow in negative territory yesterday. A lot of that having to do, jumping around, with UNH as my charts catch up this morning. And yeah, UNH, how about it yesterday? When I was on the air at 9 o'clock, 340. We make it all the way down to 310. This morning, we're up a bit, up by $13 on UNH shares, but nonetheless, that was the Dow. And yeah, this morning, it's actually going to give the Dow a lift as you're up by $13 to 324 on that index. And boy, we got some action in yields in the dollar. And how about gold? We'll get into it. The 10-year, 109.31. We're pushing the lows that we had last night. So what is that? That is lower price, higher yield. You have the 10-year. We might be at 4.5. We are. We're at 4.5. 4.497. Can't get much closer. Nonetheless, 4.5% yield on the 10-year. We have lower price, higher yield. Okay. You jump over to the dollar. Quite a move lower in the dollar. We're catching a little bit of a bounce, but look where we are. We're right back to where we were on Thursday. Okay. In context, look where yields were on Thursday. The 10-year just traded down, what, 1.5 from where we were, and the dollar's right back to where we were, to 108.62. So yields are rising. You're not getting that dollar strength in the same way. And gold is getting slammed down $63. Check out this move going on since about 7:15 this morning. We were at 32.39. Now, what's remarkable here is, to back things up to the dollar for a moment, on Monday, we were reaching 102. You did it pre-market at 7 in the morning, and we did it in the afternoon. So the dollar was between 101.50 and 102. Remember that, on Monday, okay? The gold contract was right where we were prior to this pullback. And so you pull up the dollar this morning, right? And you say, man, we got the dollar ripping lower. We're from 102 to 100.50. And on that pullback, gold couldn't catch a bid. Gold was actually negative by $8. Okay? Remarkable. And what happens? That's just extreme weakness. And you get a slight uptick in the dollar, and you get a sell-off in gold. You get a sell-off in silver. There is some weakness right now in this metals market. Down $64 on gold, down by 2%. You check out the move in silver. Look at that move. Silver down by 80 pennies or 2.4% right now. You put things on a daily. Silver going back to this $32 number that it's just been oscillating around. That's a daily. You back it up longer than that. And that's the highs from 2024 made in May. And that's where we've been jumping around for basically a year on silver at $32. Longer term on gold. Yeah, different story. You're digesting a 1-to-1 A to B, C to D, and you got a little bit of a pullback, 31.83. But can't help to think, and we were talking about this on the program as well. We got to talk about gold on a day like today, and we have a lot going on. But quite a move in gold, especially in light of where the dollar is, right? So let's talk about the move right here from September that I've put in a box to January, okay? This move was when you had the DXY strengthened from 100 to 110, and all gold did was consolidate, okay? And what's remarkable here is that the inverse is happening right now, okay? You're getting dollar weakness, and gold can't find a bid. So even in the face of dollar weakness it's going to be difficult for gold to trade to new all-time highs when realistically, that relationship is dollar weakness, gold priced in dollars. You're going to go up, but you're seeing the writing on the wall today, man. 31.81, gold off by 2%, nothing to do with the dollar. Metals pulling back a bit. You know what's not pulling back? NVIDIA shares. How about another $4 to the upside? You're going to open at about 133 from 130 last night on the close. NVIDIA up from $86. Amazon on a heck of a run. They're a bit higher. Yeah, by pennies today. 211.37. We're trading at 211 right now. Let's jump around to some of the headlines. We kick things off with how about those tech giants? Yeah, whether you're talking about Amazon, right? NVIDIA. Yeah, AMD's another one that's going to be higher as they're moving and shaking and making deals. Look at AMD up by $7. I talked about this yesterday. Guess that was the buy. I was saying this is how you break out of a downtrend channel, right? And yeah, we're going to do it again. We're going to be above the highs of March. You're going to open at about 120 for AMD. You take a look at the weekly, strong volume last week, and yeah, we're going to get some volume this week as well. We're only 2 days into the week, and we already have 100 million shares traded. Look at that acceleration. Jump around to some of the other chip stocks. Intel shares, 22.46 right now. Yeah, NVIDIA's size 134. All right, we jump to some of the other Magnificent Seven. Microsoft shares down a bit to 446. We got Walmart with their numbers tomorrow after the bell. A little bit of downward acceleration. Walmart underperforming some of the tech stocks on this acceleration higher as it had overperformed when you got a market sell-off. Nonetheless, we're trading right now basically flat at $95. They'll be out with their numbers tomorrow after the bell. We got retail sales tomorrow as well after the bell. But yeah, we'll be keeping an eye on yields, the dollar, and always a good day. We got our man Teddy Cakesack coming up at 40 past the hour. We'll get his take on this dollar action. 100.696 right now on that dollar as we got yields, man. How about it, right? ZN, yeah, with a 109 handle and 4.5%. You look at that trend, lower price, higher yield coming at you. We're coming into the April 9 lows. Put it back on a daily. The lows we had, and remember, we traded lower a couple days after we got the 90-day pause. 90-day pause was April 9th. It took that 10-year a couple days to stop trading south, and now we're challenging that area again. And yeah, the lows are only 109.08 and 109.13 on the 11th, and then the 14th on that Monday you really accelerated higher. But we're challenging those areas yet again, and we're actually below where we were at the end of March. We'll see where we go. Dollar at 100.70, continuing to bounce. We just hit a low of 100.271. All right, we jump over to copper. Yeah, some of these copper stocks, Freeport-McMoRan, what happened is Monday, right? Back things up here. So we come into the break. So Monday, you got gold trading lower. You're extending the losses today. But the copper stocks on that China news, Freeport-McMoRan, Southern Copper, trading a little bit higher. Stay tuned, folks. Markets up by 12. NASDAQ 100 up by 60. We'll come right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. S&P's up by about 12 points as we come into the opening bell 10 minutes from now, trading at 59.17. And we jump around. We're talking yields. We're talking dollar. Let's talk a little bit of mortgage demand. So mortgage demand from home buyers continues to recover, even with higher interest rates. You're talking about 6.86% is the 30-year fixed rate mortgage. Excuse me. You jump to the numbers. Application volume rising 1.1% last week compared with the previous week. Average contract rate, as I mentioned, 6.86. Pretty remarkable that conforming loan balances are now $807,000, but it makes sense in terms of what a normal house for a family costs right now. The rate was 22 basis points higher than the same week a year ago. Applications for a mortgage to purchase home rose 2%, 18% higher than they were a year before. Government purchase applications up almost 5% for the week, 40% compared with a year ago. Total active listings nationally are now about 14% higher than they were at this time last year. New listings up by 6%. What is remarkable, okay, is that, I have a loan for property in South Tampa. 5.5 years ago, that loan was refinanced. It feels like yesterday because it was right prior to COVID. It was November of 2019. Yeah, November 2019. 30-year, I think I got 3.75%. Okay, man, if I had just held out for 6 more months, right? Probably should have done it again, but nonetheless, it's remarkable that it's that long. So you're talking about them now in there for almost 6 years. You are going to start to get this area that we've been there for 5 years, 6 years. 1 year in, 2 year in. Very difficult to stomach. New interest rate, 6.86, pretty difficult right now as well. And as I say that, you got yields rising. The one thing that you could have play out here is that if you get some normalizing coming out of this treasury market, we have extreme volatility, and that creates this wide gap between what the 10-year is and what the 30-year is. Historically, that gap, about 2% maybe, even lower at some point, okay, at some points. Right now, you can see the 10 years at 4.5. The 30-year is at 6.86. That's a 2.36% gap from the 10-year to the 30-year fixed rate mortgage. Even if rates stay where they are, there is the possibility that potentially that comes down. But we have a housing crisis. We'll see how they play out. Another article I was taking a look at in terms of what we're looking at this morning. How about those home builders? Where are we seeking value? And here we go. This is the one. Yeah. So out early this morning, 5:30. Citi, JP Morgan see 2025's laggards turning short-term winners. And, Kevin Hinks used to say, folks, at a certain price, I'd be a buyer of almost any equity. At a certain price, I'd be a seller of almost any equity. Something to that degree. Okay. But it makes sense, right? There's undervalued equities. There's overvalued equities, no matter how good the companies are that underlie them. And what this article basically states is that it's going to be pretty hard from here on out with the tech stocks that are up 20, 30, 40. I mean, you check out companies like Boeing, man. Boeing doesn't stop going up right now. You're going up to 205 yet again. You were just at 128. You're up, 60% off the lows? It's going to be a little bit more difficult when that comes in. But what they talk about is, okay, and they talk about the home builders in here. They talk about those companies that have underperformed. Small caps, one of the biggest winners when Trump won. Let me see if I can find home builders. There we go. Yeah, second paragraph. There we go. Small caps, technology, hardware, and home builders. And I found myself looking at those. They haven't caught a bid yet, though. You're looking at those home builders, man, we need a sign of strength. All right? You see the way AMD breaks out of that downtrend channel? Would have been nice to get a little bit of a pullback and a test. Okay? But that's how you really break out. And yeah, AMD's probably got higher to go. You jump over a little Lennar, we're getting close here. Okay? We haven't really caught a bid, but you can see if you put things to the relationship of that downtrend channel, the consolidation we're getting at the lows that we've been getting, for what? There's your April 9th acceleration. Okay? No real reaction like the rest of the market, but yeah. 112.37 right now for Lennar. KB Homes, we took a look at DR Horton. In the same area, right? They were all in this dramatic downtrend channel, and the losses have stemmed. That's just a daily, though. Things get a little dire when you start going a little bit bigger picture. You're barely chopping around, and if you put these things on a monthly, maybe a case that that's a nice candle that turns around on the home builders. But as you see, some work to do. And boy, you talk about a run. Just talking about what potential. Look at that, right down to the 618. From the run that started in 2022 for these home builders, DR Horton from 60 to 200, man. All right. Jump over to Tesla, catching a bid yet again. We closed yesterday at 334. We're at 342 right now. We take a look at a daily. And yeah, we got some volume on this acceleration higher. Yesterday, you do 137 million shares. You trade up to 334. And yeah, that's quite a number always looming, right? The highs from 2021 of $400 and change. You get a double top out here from the highs of 2024. And that's where it looks to be making a run for right now. $400. We're at 343 so far this morning for Tesla. We jump around to other equities. Walmart shares, as I mentioned, basically flat. We jump over to Target shares. Flat as well on the retail spectrum. TJX. Yeah, this equity's got quite a nice uptrend channel. I've talked about this before. We're trading right now at 130, and, put it on a weekly. Go back a few years. That channel begins about June of 2022. TJX crushing it. The flip side of that chart is Kohl's. You're catching some action, though. Kohl's. Now up what? $2 off a $6 low. But I say the expression, folks, small numbers, percentage moves can be dramatic and misleading. Okay, when you go down to $6, yeah, $2 move is going to be a 33% acceleration. But small numbers, percentages can be deceiving, because you can say that we're 33% off the lows, or you can also say that we're 33% off where we were trading in March. So we have a bid, but on a longer term basis right now, we back this up. Not the kind of strength you want to see in an equity Coles, 806. Now, I talked about TJX, a nice uptrend channel. Mickey D's as well, man. You're looking at this one, it goes back even further. How about Mickey D's? How about this uptrend channel since 2015? A nice decade of an uptrend channel. We're right in the middle of that range right now, but if you're looking to get in McDonald's, yeah, put that channel on your radar, man. Maybe 280, 285. All right, folks, market's in the green. We're coming back for the opening bell. Don't go away.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com and hit Watch Tiger TV. That's TFNN.com and hit Watch Tiger TV.
Welcome back, folks. We got equities open. You have an S&P right now, up by 12 points. NASDAQ 100, tech stocks leading the way yet again. NVIDIA, AMD. NASDAQ up 56 points. Dow up by 64 right now. And yeah, let's jump around. Kick things off with Amazon shares up by 0.25% right now. Trading at 211.79. NVIDIA leading the way, up another 2.3% to 132.94. AMD, look at that move, up by 6%. up $6.70 to $119.13 right now. Google catches a bid up, say 0.6%. Microsoft shares flat this morning at $4.49. Tesla with a bid gives it back slightly, but still up by 2% right now. Big numbers, man. And yeah, you talk about the deals, you talk about the headlines. That Mideast visit opens the floodgates. And this one was out last night, but you could write it yesterday. You could be write it today. It seems like the news keeps going, man. The billions keep going. NVIDIA is going to supply its most advanced AI chips to Saudi Arabia. Okay. 18,000 GB300 Grace Blackwell products. And then AMD is going to provide chips and software for data centers in a $10 billion project. And Amazon is going to invest $5 billion. Cisco out there. OpenAI, of course, considering building new data center capacity in the UAE. So yeah, tech stocks accelerating higher. And keeping our eye on Walmart with their numbers out tomorrow. Walmart positive by 0.2% right now. Target shares down. Ooh, there you go. Watch out for Target. What's going on with Target shares? They get a downgrade? They sure did they? Yeah, Oppenheimer adjusts their price target on Target to 130 from 150. Target down by 2.1%. Man, the underperformance just doesn't stop for this equity. Look at this thing on a 5-year. 270 down to 87 bucks. Man, we got volume at the lows here on Target. Look at this. This is where the volume, right? Look at the volume on the lows. We creep higher, low volume, and we're going to get an acceleration in volume this week. Trade at 95.87. You know, I talk about we go to the Target near me. We're always in the video game section, checking things out. The new Nintendo Switch 2 is coming out. And, you know, I was saying it's interesting just because I'm in the store enough. So they have the new Switch 2 coming out. Instead of just replacing the Switch 1 with the Switch 2, they completely clear out the Switch 1. It's going to be like empty for a month. It's a hole in the store now. It just doesn't seem like the best way to do things. And when you see those small differences of ways it's happening within stores, talk about Sam's, man. Excuse me, Walmart shares on the flip side of that run. Look at the difference, right? Walmart, June of 2022, you're up by 150%. I guess you got to back it up further to find the highs. So you got to go back to the highs of 2021, or was Walmart back then? Whew, man, what a run, right? Walmart up 150% since then. Target down like 75%. Just eating their lunch, man. And they are. It's a big difference. The quality, the prices, everything. All right, we keep our eye on gold. Bouncing a bit off the lows. Still down by $52, but we were down to $31.78. You're almost $20 off that low right now. And yeah, as I mentioned, man, Teddy coming up next segment. We're trading right now at 100.62. All right, let's jump around. Yeah, talking about crude and then EV. So this story out from Bloomberg earlier this morning. OPEC made careful start to supply revival in April before that planned output. Now, crude is caught in a bid, man. And, you know, the next article we're going to talk about is how EVs aren't eating it up. And look at it, pushing the highs again, right? We're at 63.32 right now. And we're bumping up against that $65 area. That's an important technical area. That's the lows of September. That's the lows of March. And that's where we peaked out at. 3 weeks ago. But yes, you talk about OPEC ramping up their supply. Okay. April marked the beginning. The announced hikes have brought it down, but we're catching a bid right now, man. And what's interesting is you look at the IEA, EVs, yeah, they're not going to take up as much crude as we thought. That story on EVs, obviously, not what was told in the beginning days. Self-driving vehicles from Tesla, not here yet as well. EVs will displace 5.4 million barrels a day. Still remarkable. They're going to displace 5.5 million barrels a day of oil by 2030, but that's down 10% from what they thought on their last forecast, and they're still 5 years out, right? So we'll see where that goes. Crude, still remarkably cheap when you put it in the context of what it can do. The utility value of a barrel of crude, the utility value of a gallon of gasoline, and what it costs, $3 for a gallon of gasoline. We're paying $2.50 for a gallon of water that realistically you can get right out of your faucet at home. Might not be as good, right? And that's why people are buying it. Look at this tech stocks, man. NASDAQ 100, power and higher, 21,395. And we are right at where we began to trade lower on February 27th. That high, 21,386. We just got over that level. We're at 21,400 on the dot. Remarkable strength. Yeah, NVIDIA is not stopping, man. Up by almost 4% right now. AMD up by 8%. That's how you break out of a channel, man. Watch out. Amazon flat right now after a heck of a run. Microsoft extending the gains. And Tesla up by 1.4%. 2.7, excuse me. Boeing shares up by almost a full percentage. 205.28 for Boeing. Jump around to some of the other tech stocks. Salesforce up by 1.2. Oracle shares up by about 0.3% this morning. Jump over to UNH after yesterday. Up a bit off those lows, but boy, yeah, still up by $9, up by 3% to $320. But watch out for that one. Their new CEO, I think he's getting $60 million. No matter what he's getting, they're a $300 billion company. Well, they were yesterday. What are they now? $290 billion company as of this morning. So $60 million a drop in the bucket if he can turn that thing around. But I imagine they have some dramatic issues with their CEO stepping out, pulling their forecast, etc. Copper trading at about $4.70 right now. I was talking about Freeport-McMoRan and Southern Copper, both of them catching a little bit of a bid on Monday on the easing of the tensions between the U.S. and China, even as gold pulled back. There's FCX. You're down by 0.7% today. You see the pop on the weekend for Southern Copper, slightly in the red today as well. Check out some of the other gold equities. Yeah, this is a tough one, man. Look at this. These gold equities. Be careful in this gold market right now, folks. Okay, look at these pullbacks going on. You give back $5 on Harmony. Meanwhile, you were getting it at $8 at the beginning of the year. And you don't have to go much further back to see that you're getting in this equity at $5 a year and a half ago, and you give back $5 in three weeks. You know, my dad used to say, you got to sell these equities. You can't hold them forever. Gold, it's cyclical in nature, especially the equities. You know, there's a chart of Harmony long term. How about that one? You talk about a technical top, right? All right, folks, stay tuned. We're coming back. We'll talk some currencies. We'll talk some commodities as well with our man, Teddy Kegstad. We're coming back. Stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. S&P's up by 13, NASDAQ 100 up by 94. We got the dollar index right now, trading at 100.578. We're going to jump over to our man, Teddy Kegstat. We talk to him every Wednesday at 40 past the hour, folks. You can head on over to the front page of TFNN, right under the newsletter tab, the Tiger Forex Report, folks. It's only $97 a month. New issues every Monday. Updates throughout the week when warranted. You gain access to an archive webinar as well. It all comes with a 30-day money-back guarantee. You can't go wrong. Teddy Kegstat, good morning.
Good morning.
So where do we begin in this market? I always check out your Tiger Forex report, man. It's a great report Mondays. Folks, check it out. And I know, I was looking at the dollar, maybe testing some of those breakout areas. Maybe we start with the DXY. I know you say it's not indicative of some of those underlying pairings, but boy, we got some action in the dollar this week so far.
Yeah, we had an explosive rally on Monday, and we actually butted right up against our upside breakout line. This in the Forex report. We fell off of it yesterday, and now obviously we're back lower on the week. Actually, we're pretty much almost where we ended the week last week, just a little bit lower, right around that area. So looking at it right now, it's like almost like nothing happened. But boy, on Monday was it ever a really big surge. So now remember, we've been talking about this, that the overall trend for the dollar index is lower, and the current rally that's going on right now should be viewed as a correction. That upside breakout level is just below our major monthly directional pivot level also. So that's a key area. I think unless we get a close above Monday's high, that may be the upper boundary of the range that we're going to set right now. I think that it's very unlikely that we're going to be able to sustain a trade above that right now. So especially with the interest rates pretty much in a sideways trend as well. So there's no fundamentals, I think, that could drive the dollar to really exacerbate a rally, if you will, to the upside. So I'd be very cautious. So I think you're going to see some buying opportunities right now in the euro US dollar and the pound dollar, as well as probably some selling opportunities in the US dollar yen as well. So which right now I would say with the US dollar yen, that might be where you'll get some of your best action over the next week or so, especially with the deals that are going on in the Middle East right now. I would say that probably not so much this week, but heading into next week, there's probably going to be some nice swing trades in the US dollar yen.
Nice. And I know I pulled that up, quite the movement, even from where we were at the beginning of the year. And then this bounce we have going on 140 to 148 and change to 146 almost as of this morning. What do you think about crude? The Middle East, of course, in focus, but really a lot of tech deals, everything going on. Not a lot of crude talk, but crude catching a nice bid off these lows right now. And what are we at? 63.30 right now. Well,
63.30, yes. That's another one too. I think it's in a range trade. I think at the most you might get it up to 65. I think you need a close or 2 consecutive closes above 65 to start worrying if it's going to push an upper boundary. And even still, I think that at most we get up to $71 a barrel, and I don't even see what would bring that on right now, to be quite honest with you. There's no fundamental or technical reason for it. The only thing that could impact gas prices, not crude, would be the fact that they're closing these refineries now in California permanently. That is going to impact, but that's going to be on the West Coast more than anything else. The national average will probably go uptick on that one. But crude oil prices are not, I can't see how there's going to be anything that's really going to boost them up right now, especially with these deals that are being made in the Middle East right now.
And what do you think about yields? You mentioned it, of course, and I know it's in the report in terms of where they are, maybe frustrating investors, but we have some negative action on price, a little bit of higher yield. 10-year, I think we're almost at 4.5 right now on the 10-year. And I know you look at the 30-year as well in your report. Mm-hmm. What do you think about yields right now, Teddy?
I look at them both. I'm watching the short-term rates right now, which don't really seem like they're sparking any real move. So, and I think it's more of a range trade. I don't think that yields have any real good shot at going higher by any real strong degree. I think the biggest drag that they have on them, the reason they're riding the lows in pricing, if you will, is the fact that the Fed hasn't done anything. The expectations, starting the year where there was going to be 2 quarter-point cuts. And now I'm hearing as much as a total of 1.25 points. Before the year's out. I would not try and get too ahead of ourselves. Let's see them just cut a quarter first before we even start talking about going to over a full point. But the market right now is dictating that, hey, until we see any real reflective action, that yields are going to go lower because fundamentals, meaning a rate cut, we're in a range trade. So I think that you could probably still get a little pullback in yields, meaning higher prices in the 10-year. I'd watch the shorter term. I'd watch the 1s, the 2s, and even the euro dollar. The euro dollar, not the euro dollar currency, but the euro dollar interest rate. If that really catches a bid, then I think you could start to see yields start to retract in front of the next Fed meeting, if you will. So, and I think that's going to be the real charting course with the yields right now. It's going to be a tough trade until the Fed pulls the trigger. There's just no real fundamental reason for it to break out either way. You know what I'm saying? To stretch yields to a higher degree, there's nothing that can drive that right now. If something comes in the market that's going to be like, hey, wow, this is going to really put pressure on yields no matter what the Fed does, believe me, I'd be the first one to jump all over it, but I can't even begin to fathom what it would be right now. So,
hey, what do you think about gold? You talked about the yen, of course, and I know gold priced in dollars having a heck of a move today, man. Well off the highs, gold off by $51. What do you think about gold today? We got a lot of gold bugs, of course, and when we're below 3,200 now, a little bit of a pullback, 31.96. What do you think of that gold action?
I like that last swing high, and I like the new swing low. I look at it as a correction right now. I wouldn't get too crazy on seeing a sell-off. But you got to realize, look at the run in gold. There's got to be some profit taking somewhere.
Totally. You can't make money if you never sell, right? Quite a run.
Right. And look at the swings. Look at the volatility of the days that we've had over the past month and a half versus just going back 3-4 months ago. I mean, you're looking at some major range days. So there's got to be somewhere in that action, big money has to be taking something off of the table. So am I bearish? No, but I think it's just reflective. I mean, look at the spreads between gold and other metals. So I think you're having a rollover of profit taking from gold into some other metals overall, and unless you have a real reason to see a surge in gold, a lot of this was tariff related, and now all of a sudden the market's like, hey, the media is the only one crying about tariffs right now. As far as everything else is going, deals are being made and things are getting smoothed out. So, and the market likes that. The market pays attention to what's really going on. And I think that's where you're seeing a little bit fundamental and technical reasons to take some money off the table in gold.
Can't go wrong when that run, man. And whether you're talking the metals and the equities, my goodness, some of those equities as well. But boy, the pullback is fierce when you trade up to quite a number percentage-wise. Sure. Teddy, I appreciate the time as always. Folks, check out that Tiger Forex report right on the newsletter tab. Teddy, have a great week, man. Look forward to talking to you next Wednesday as always.
Thanks, Tommy. You take care.
Thank you. All right, we got the S&Ps rolling over a little negative during that 9-minute segment. S&Ps, look at that drop. We're in the red by 2 points. Come back, folks. We got one more segment. Don't go away.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&Ps basically right down to the lows we're at, about 6 a.m. this morning, testing 5,900 on the dot. We're trading right now at 5,904. You take a look at the volume on the indices. Can't deny we got an uptick on Monday. A little bit of a trail off yesterday. Today, going to be an important day. We get some follow through, or do you get a lightening up of that volume yet again? And yeah, coming into important technical areas, 6,000 in the S&P and the NASDAQ 100. We're right where we were when the volume started to pick up to the downside, just above that level. But look at, I mean, folks, sometimes, right? What was I just saying? The high there, 21,386. You reach a high of 21,405, and boom, just like that, you give up 100 points. We're at a critical area. That was a lot of volume on the downside. You had the lowest volume here. We have not had that same type of volume on the upside as we've now drifted high there. Okay, we're not talking about the move from April 9th. We're not cherry picking the low of 16.4. We're taking the low of about 18,000, up 3,200 points in the span of how many trading days? 3, 6, 9, 12, 15, 17 trading days. You're up 3,200 points on pretty low volume compared to the volume we had in the lows. And again, doesn't mean you can't drift higher, right? What were we saying? Who said it in the den yesterday? On fumes, as my dad would say. Not on fumes Monday and Tuesday, okay? We had some action, especially Monday. But all things considered, even a day like Monday where you have the indices up 3 or 4%, you only did 625,000 contracts in the NASDAQ 100. Folks, we did more volume than that for almost 3 straight weeks from the end of February to March 14th as people sold off that market with volume. And just like that, everything is red. Barely red. The day is young. On that note, Basil Chapman's coming up next, folks, with the Tiger Technicians Hour. Thanks so much for kicking off your trading day right here with me on the Morning Market Kickoff at TFNN. Have a great day, folks. Have a safe day. Stay tuned for Basil, and I'll see you tomorrow. Have a great one, folks.